growth comes the need to improve infrastructure, with calls for better financial planning through extensive research and exchange of ideas. Our next session, ladies and gentlemen, Aviation Financing, is a panel discussion on financial models across the world. Now, stakeholders, banks, investors will present their views and perspectives on different models and plans required to meet the needs of a growing industry. I have with me on stage the moderator of this panel, Mr. Stefano Baronci, Director of Economics, Airports Council International. Did I get that right? World, to moderate this session. I'd also like to call upon Mr. Siddharth Kapoor, Executive Director, GMR Airports, who's already seated here with us. We also have with us Mr. V. Tulasidas, CEO, Kannur International Airport Limited. Mr. Emmanuel Menantau, Co-CEO, Kansai Airport. Mr. R.K. Jain, CEO, Mumbai International Airport Limited. Mr. Prasad Gadkari, Head Strategic Investment, NIIF. Mr. Bruno Benvenitze, VP Nordic Aviation Capital. And Mr. Ajay Singh, CMD, SpiceJet, are up here on stage participating in this panel. I now hand this over to the Honorable Moderator of the session.
Okay, I hope you had a very nice short break. We are now ready to start this session about aviation financing. Aviation financing is a very complex technique, and I'm sure that all the distinguished guests today very well master this technique. But at the end of the day, it's a human phenomenon. So it's very much driven by the decisions that are influenced by the behavior of people. And there were two professors in the US that studied a concept of loss aversion. Loss aversion in very simple terms means that the pain for a loss is perceived as much more acute than the pleasure for a gain. And in order to explain this to their students, they were doing a very simple test. They were saying, if I toss a coin and if it's tails, you're going to lose $10. Then they were asking to the same students, how much will you be willing to gain in order to consider this test acceptable to you? And surprisingly or not, the answer was always above $20. Now, this is just a simple example to explain that people are very much keen to leave a lot of money on the table in order to avoid a loss. And you might consider this concept that was introduced in psychology, but then moved and being applied in economics to be quite intuitive. Now, if we apply this to our sector, to aviation, loss aversion explains to some extent why, despite the benefits in the long term of infrastructure development, despite the benefits in terms of technological development, from a cost perspective, from an environmental perspective, there are still, in many respects, a lot of aversion from stakeholders, from the industry, and sometimes also from the institutions to embrace a project. And of course, in the case of India, which is a market that we have learned over these hours to be extremely challenging because of the competitions, decisions have to be taken, and have to be taken soon. And they require a vision, but they also require the right process to implement that vision. Now, behind me you see the numbers of the growth over the last 10 years, 9.3%. Overall, the so-called aviation megacities have doubled over the last 5 years. But if you look at the last 3 years, in the case of Asia Pacific, the number of aviation megacities handling more than 40 million passengers per year have doubled over the last 3 years only, including Mumbai and Delhi. And if we consider the Airports Council International forecast that we update every year, you see that there will be a full reversal in the ratio between advanced markets and emerging markets in favor of the second. Now, we talked about how fast is India in terms of growing. In ACI, we are actually even more optimistic of having India to become the third market internationally and domestic to get the third position. It will come in 1 or 2 year maximum, according to our forecast. China will be the first market in 2030. Indonesia will be the fourth market, according to our estimation, in 2032. This will mean, basically, that the market share of Asia Pacific will grow from 36% to 46% in the long term, so by 2040. And the contribution of traffic growth will come from countries like the ones that we have here, China, India, Indonesia, and Vietnam, that only combined do actually report 40% of the total population. Now, the middle class growth, the growth in terms of the income by 5% over the next 10 years in India, by 4.7% in China, and by 3.9% in Indonesia, will very well explain why the propensity to fly will grow in the future, despite being relatively low compared to other countries, to other advanced markets. And here you see, intuitively, everybody knows about China, about India, but you have countries that will grow very fast, such as Vietnam, Philippines, and Indonesia. So those are markets that will need to face the capacity crunch, and to some extent they're already facing it now. Now, when we talk about India, you see that if we look at the short term, and we can be much more precise rather than looking at the long term, India will be the second fastest market to grow in the next 5 years, and actually will be the first one in terms of movements. We talked about the cargo vision, and also India can play a role there. So try to remember these dates. 2025, we forecasted the traffic to double in India. 2032, it will triple. 2038, according to our estimation, will be 4 times bigger. We might be wrong, but it's just a matter of a few years of a mistake, possibly. Now, I'm not going to talk too much about manufacturers, because I know that there will be a session later on. But just suffice to say that you might expect 49,000 aircraft flying in the long term, 37,000 of which will be new aircraft, sorry. And you'll see that the RPK in India will be extremely aggressive in terms of growth. It's against this background that I invite you to consider the role of private investors. And here I want to be very clear from the beginning. Public airports are delivering as good as private investors. But there are, in many countries, the need to engineer solutions for finding the adequate capital in a timely manner. And that's why the private counts. Private has counted for the airlines first. It has counted also in the leasing companies sector, but also for airports. Size matters. 51 out of the top 100 airports have some kind of PPP or full privatization. 43% of the total traffic is managed by these airports. And Europe and Latin America lead in terms of opening to the private capital. In Asia Pacific is also relevant. But this is a point that has to be measured or compared in terms of the value creation. Value creation can be articulated in terms of quality of the service. 26 airports in India participate to the airport service quality benchmarking today. And the PPP airports in India have scored very well, even above the average in Asia Pacific. That means a lot, considering that the region is masters really in this sector. But you cannot get the right quality without investing. And this chart very well showed that over 4 years, from 2012 to 2016, PPP airports have invested more by 14% than public airports, because this was what they were expected to do. This is a chart that I think will be crucial for the discussion with my distinguished guest. Because despite the fact that PPP is familiar to some countries in Asia Pacific, the penetration of foreign investors in the airport sector is still very low compared to other continents in regions in the world. And there may be very different reasons for this. We will try to understand why this is the reason. Now, it's not by chance that 70% of the passengers that use these PPP airports are under a regime which we call it dual till or hybrid till. So a mechanism whereby the airport is in a position to invest part of the commercial revenues for covering the full cost that cannot be covered by the aeronautical revenues. And rightly so, because of the competitive pressure that most of the airports encounter at this time, and because of the objective of having affordable prices too. So you'll see that this is an important point. Now, I want to finish by coming back to the concept of loss aversion. A country such as Mexico is a country that has experienced, as much as India, in another continent, a huge growth, has experienced a huge level of congestion at airports. And the plan of the previous government was to build a new airport in Mexico City. 1/3 of the construction was delivered. All of a sudden, a new government came in and decided to scrap the project. So the industry faces the risk of having to manage congestion at the existing airport without a predictable system. Was it loss aversion? It's hard to say. Now, let's try to introduce the speakers. And I hope it was possible to give to all of you a kind of background. I think that against this background, I would like to start with Emmanuel Menanteau, who is the regional director of Vinci Airport. Vinci Airport is a key player worldwide, actually. Is a private investor that has a portfolio that, if I'm not wrong, consists of 46 airports in the world, in 12 countries, in most of the regions of the world, and a very diversified portfolio. I have to say, Santa Claus has been very, very generous to meet your wish by providing Gatwick Airport and by adding Gatwick Airport and Belgrade in Serbia very recently in December. Now, what kind of lessons have you learned, Emmanuel, in terms of a privatization process and in terms of the dialogue that is needed to be set in anticipation of a privatization process?
Good afternoon. Thank you, Stefano, for this nice introduction about Vinci Airports. I wanted to start with something different, but your introduction leads me to say that I think in our world of airport privatization and what you've just shown for the future, I think there is no loss. There is only opportunities. So I guess that, and that's what we say in Vinci, we have opportunities. There could be opportunities that will become concrete, that will become real, and those who won't. But it's not a question of loss or gain. It's a question of having conditions that meet both the seller and the buyer. So in case of airport privatization and concession, it's first of all a push that comes from sellers who are usually government and states. So there is no opportunities if there is no governments. We wish to create the conditions of privatization of greenfield or brownfields. So what we learn is that Vinci Airports, as you said, has grown quite rapidly for the last 10 years, going from airports in Asia like Cambodia or in France, a small airport, to a recent acquisition in London Gatwick, Belgrade, or in the US last year in Orlando, by going into territories not only for investments, but to develop on a win-win basis with the grantors, those territories. Vinci Airport is not only an investor. Vinci Airports build, operate, and maintain those airports. And where we go, we try to create the conditions of leveraging those assets. For this, we need confidence. And where it's successful, and usually where we can make the deal, is because the condition of the deal are condition of confidence. So just to name few of those conditions, first of all, the duration. I mean, usually airport privatization are large deal. It could be small airport, large airport, but usually governments have the idea of privatization because there is a need of investment, and there's a need of investment also in terms of developing those airports, so investing in capex. So it means that duration of the concession is important in order to provide private investor proper return on investment. It's also important to set the right confidence at the beginning in the principle of the privatization from the tender, not to be so ambitious in terms of closing the deal so close and giving the right duration for the different investors who are interested to clearly understand how this deal is going to happen in terms of traffic, in terms of financial condition, in terms of operation. Then, of course, you mentioned about regulation. I think regulation and economic regulation are very important. Private investors need to find a way to leverage or upsides as professionals revenues, and then to get the right regulation in order to be free, of course, under control of some conditions, but to be free to leverage those different opportunities. I think that probably set of the rules, some of the rules that been making us some success in different countries. Today we operate 12 countries around the world, almost all the continents, from Japan, Kansai, where we operate 3 airports, to Latin America, Santiago de Chile or Brazil. And for all of this, of course, I think it has been said at the beginning of this conference, flying for all, basically it's making sure that all stakeholders, because operating airports, it's a question of a community of stakeholders, are all set at the very beginning to make it a success.
Okay, thank you, Emmanuel. Not just because it's next to you, but also because it meets the profile of being an investor, but also operating airports nationally and internationally. I would like to hear from Siddharth Kapoor from GMR, Executive Director. What is his view in relation to the experience collected in countries where the level of risk is objectively high? I mean, and of course, I can refer to Philippines as one example, where you have been a first mover in terms of investing, but also to country like the Greek area, where and Crete in particular, which went through a depressing economic situation. So what could be learned in terms of improving the experience and the approach in India?
Thank you, Stefano. I think, and good afternoon, everybody. It's been a great gathering, and I must congratulate Ministry of Civil Aviation for getting such a big crowd together. For us, we have been first movers in India. We were first private operators for Delhi, Hyderabad, which were completed, and they changed the face of airport infrastructure in India. And then we went out. Our first foray was Turkey, Istanbul, Sabiha Gökçen, which we exited because of, at the right time, because of impeding political scenarios. After that, we went into Maldives. Maldives was a little bit of accident there, and but I think we came out with our pant and shirt. We didn't get any cream or strawberries, but at least we got the cake back. Cebu has been a fantastic experience. I think the way Philippines has gone about privatizing, they went for predetermined tariffs, and the tariffs were very clearly inked into the concession agreements itself. There was construction risk, there was traffic risk, but that is something bidders were very willing to take. And there were 7 international bidders who were bidding for that airport. And we were the highest bidder out of it. The other part of the story was that there was no revenue share. It was not based on revenue share, it was based on a one-time upfront payment, which also meant that, while revenue shares are good from a risk mitigation point of view, but what happens, I'm saying this from an Indian perspective also, that where our airports are based on revenue shares so far, there is always that element of suspicion that whenever there is a payment to the government which is based on a variable payment in future, that whether that payment is correctly determined or not based on your accounting records. There can be various business decisions which can be taken to reduce the revenue. There can be creative accounting, and there is always a suspicion from the government side that the revenue which is paid to the government is not the correct revenue. So a one-time payment which can also be funded by the banks is another efficient way of delivering value to the government and ensuring that the government has no, I would say, fingers in the pie as far as the concession is concerned. They have mandated certain ASQ standards, they have mandated certain deliverables, those have to be completed, but apart from that, there is no day-to-day interference into transaction records, in the way you do your business, etc., etc. Greece, again, when we went into Greece, we were also concerned about the economic risk of the country. Politically, it was fine, it was part of Europe, so there's no issue. But the economic risk was definitely an issue. So we went in with a low equity, but we built an option to increase our equity. And in fact, 1.5 years back, we exercised that option to increase our equity to 40%, given the fact that we saw stability in the economy returning in Greece. And officially now Greece is outside any kind of troubles from the Eurozone. We'll be signing the concession agreement very shortly, early part of February. And they follow a very robust process. In fact, the concession documents, the transaction documents are vetted by their equivalent of the CAG, which is the Court of Audit, before signing of the concession. So nobody can raise a finger later that, no, this was a problem or that kind of a problem. So the government auditor cannot raise a problem later that, you did not go about doing the privatization properly. So it is all done. It takes a little bit of time, but we found that system is very robust. And the concession agreement is actually cleared by the parliament. So it becomes a law by itself. So it cannot contravene any law because it overrides everything else. So it was a very, very sound system of concessioning on PPP. And we liked it. And of course, now we will be going ahead and signing the concession and moving ahead on the project. In India, of course, our experience has been great. We have built fantastic infrastructure in Delhi, Hyderabad. Other players like GVK have done fantastic infrastructure in Mumbai, Bangalore. So we have seen privatization as a very strong success story in India. What has been a little bit of issues have been on the regulatory side, where over the last 10 years, based on the concession documents which we had, we have been having disputes with the regulator which have gone to appeals. There have been some decisions at the appellate level which have gone now to the Supreme Court. So based on those issues, there would be some clarity emerging, but it has not been a complete satisfactory outcome, at least on the concession agreements which were signed. Going ahead, we see the concession agreements which were being planned now. We see that there is a change in shift on the way revenue is to be delivered to the government. We see that the government is now moving towards per passenger revenue to be quoted so that it is not linked to the revenue share. But unfortunately, now that there is no linkage between the revenue as well as the payment to the government, it is based on per passenger, an absolute number. But still, I mean, we are puzzled to see the concession agreements which are now being proposed for the 6 airports to contain clauses like you cannot do a related party transaction, you cannot do joint ventures, you cannot collect deposits. Especially, so if there is no linkage, why have all these clauses which are in a way trying to curtail a way in which you want to do business? If the government's linkage is not there as a shareholder, if it is not there as revenue share, then why have these constraints in concession agreements which restrict the way you want to do business by the private entrepreneur? Having said this, I think I expect there is good demand of, I think there will be a good response from international bidders also. The regulatory situation has settled and clarified to a large extent, because now hybrid till is a very clearly stated policy, which I think is a very, very positive from the government, which was earlier mandated as a single till by the regulator, but now the policy has come in. So very clearly, hybrid till is a policy which I think is a very, very positive step. There are still some devil in the details, which, which all bidders need to be mindful of. And I can give you an example that normative cost of capex is still a overhanging sword on any future privatization. The regulator still has a restriction on capex, and that normative cost, although the regulator has been very gentle on looking at it and approving on a case-to-case basis, but going ahead on a long-term basis in a 30, 40, 50-year concession, how that pans out, we really don't know. So one has to take a call on these issues, which are still, I think, there are some issues in terms of the regulatory framework which need to be addressed.
Thank you, Siddharth. Now, it certainly will be very interesting to assess the outcome of the privatization process for the 6 brownfield airports. As an outsider, I was a little bit surprised by the very challenging deadline for submitting proposals. But certainly, if the interest is there, certainly we will have lots of investors, including foreign investors, to show an interest. Ladies and gentlemen, we can count here today on a panel that is composed of representatives from other industries. And I think we are privileged, actually, to have the managing director of an important airline player, SpiceJet, in the person of Ajay Singh. SpiceJet is a company that has gone through an impressive turnaround. Is a company that makes me think a little bit at my young time at Ryanair, that was so successful and ended up to really cannibalize the market and get the competitive advantage versus incumbent airlines. Now, your market share doesn't show yet the results of Ryanair in terms of domestic market in particular, but still is impressive. Ajay, you have to face, of course, the problem of congestion. slot allocation systems that to some extent favor, especially at very congested airport, incumbents rather than new entrants to get slots. I would like to hear have a comment on that, but also to see if over these years you have experienced value creation in terms of the airports that have been privatized. And what would you expect the brownfield airports to deliver, the brownfield airports that are under privatization to deliver to a customer like your airline?
Well, firstly, I think that the problems that you are talking about are all good problems. These are problems of plenty, and they are occurring because India has been the fastest growing aviation market in the world over the last few years. So we are very excited to be a part of this rapidly growing aviation market. And, as we have problems, there are unique Indian solutions also to some of these problems. You've seen that while India has been growing 20% every year, and airlines like us, as you said, we went through a downturn, we nearly shut down, we came back strongly. We've had profits the last 16 quarters, we made profit every quarter. We've doubled our fleet, we placed one of the largest orders in this part of the world on Boeing. And these aircraft have started to deliver now to us. The airport infrastructure, of course, is challenged at this time, especially in Delhi and Mumbai. We have huge challenges in Delhi and Mumbai. And very, very difficult to get parking spots, very difficult to get slots. But one of the things that this has done is that it has spread aviation throughout the country. Airlines like us, as we get new aircraft, are being challenged to find new destinations, new airports to park at, new destinations to fly. And one of the most wonderful schemes that has been formulated by the government of India is this Udan scheme. You've seen that what has happened is that in the 50, 60 years after independence, India had only 75 airports which were functional, operating, where we were taking our flights. Under the Udan scheme, in just a very, very short period of time, and I really want to compliment Secretary Civil Aviation is here, all my colleagues from Civil Aviation Ministry. This wonderful scheme has created so much airport capacity. These were all airports which the country had, but were never being used. And these airports have suddenly become active. We fly ourselves to so many of them now. We have 25 flights under the Udan scheme. And our expectation really is that in the next 2 or 3 years, there will be 75 airports. So in 60 years, we had 75 airports. In just 3 or 4 years, we will have another 75 airports. So this is the kind of capacity that's been added to the Indian system. Of course, we'll need to expand these airports. We'll need to, make sure that we can fly larger planes into some of them. But incredible, incredible work that has happened. The country and its policymakers are not just sitting around. We are trying to find solutions to problems, including, I know, the wonderful work that Delhi is trying to do, that Mumbai is trying to do, build new airports. My only suggestion in this is that if India is to continue to grow at a fast pace, we need to make sure that the end customer gets a low-cost experience, in the sense that we needn't build very, very fancy airports. We need to build more functional airports, which don't cost as much money as airports, some of our airports have cost in the past. And therefore, by building lower cost airports, we are able to pass on lower cost to our consumers. Because the one thing that has really accelerated this aviation revolution in the country is the cost, is the fact that you can fly a 2-hour flight at $60 or $70 on average. $60 is about the average that we have right now, which has to be amongst the lowest fares in the world. So much like the telecom revolution took place in this country, where from 2.8 million phones, we've gone up to 1 billion phones in under 10 years. That happened because we brought the tariffs down. In aviation, the revolution, a large part of it is because there are low-cost airlines, the fares are low, that many, many more people in India can fly. And despite everything that we've done, we just have 3% of people flying. So for the next several years, there can be tremendous growth if we keep building infrastructure and ensure that the cost of flying is kept at a moderate level.
Thank you. Ladies and gentlemen, I'm experiencing a paradox because the organizer is asking to an Italian to properly keep the time. So I will try to count on the help of the additional speakers to keep in the 15-minute slot that I've just got. And I will now move to RK Jain from the CEO of Mumbai Airport. Now, RK, as a person that came for the first time to India, experiencing your airport, it was such a surprise because I was biased by an expectations that was well low to what I really experienced. Now, and it was for me the first way of experiencing India by using your infrastructure. Now, as Mr. Singh already said, the issue of affordability has to be taken into account too. And I think here the real issue, looking ahead, is to find the right balance in the consultation and dialogue between the investor who runs the airport, the institutional stakeholders, and also your customers. What would you suggest to improve that system ahead of the challenge that we have just described?
When we started, the privatization started in 2006. Before that, 2004, Hyderabad and Bangalore airports came. Then these brownfield airports, Mumbai and Delhi, were privatized. What we have delivered, you can see that what has been delivered during this privatization. And according to me, this model has worked very well. If you see the number of what has been contributed by way of revenue share, is something very surprising. During this period of time, from 2007 until last year, 2 airports together have paid about more than $3 billion of revenue share to Airport Authority, which is not a pass-through, so it is not a burden on passenger. It is 84% of profit before tax of Airport Authority of India. So it is profitable because of these revenue shares. Initially, there were some hiccups on regulatory issues and other things. They are mainly sorted out. And they arose because initially concession agreement was not fully honored. Now those things are getting sorted out, so there is no major issue. In the long run, this privatization is the only solution for bringing the huge investment which is required for growth in civil aviation in India. The number of airports which are required, the amount of investment which is required is very, very high. And for that, it is essential that regulatory clarity is completely in place. There may be different model revenue share per passenger. Every model has plus, every model has minus. It depends on what type of airport is being privatized, what are the potential of that airport, how much non-aero can be grown, because the moment per passenger charges are imposed, the entire risk come on the airport operator. If corresponding non-aero increase is not there, then the whole risk come to airport operator. So in the long run, we have to see how this regulatory things are clarified. And certainly the huge investment which is required, that certainly requires that there has to be funding available. Banks recently are shying away from funding infrastructure projects, while airports in general are very, very, very good assets to fund. So there something has to be done. And other than that, certainly privatization in the long run is very good.
Thank you, RK. And now we move to a leasing company with Bruno Benveniste. He's the VP of Nordic Aviation Capital. Your company is fundamental in the aviation ecosystem because it can reduce the initial capital outlay of an airline. It can allow the airline to size also the fleet according to the demand. Now, I would like to hear from you if the positive trend that you have benefited from in terms of a relatively low borrowing cost, in terms of a customer that has been healthy over the last 4 or 5 years, and in terms of a high demand for new aircraft, will be there still in the future, and what is your plan, especially in markets such as India and China?
Thank you very much, Stefano. First of all, I want to thank your honorable ministers, distinguished guests, for inviting me and for representing my colleagues from other leasing companies. Personally, I want to introduce myself. I work for Nordic Aviation Capital. We are the world's largest regional aircraft leasing company, which means that our portfolio of aircraft that we own, circa 500 aircraft, have between 50 up to 160 seats. So for Nordic Aviation Capital, we do not own nor lease narrow bodies, nor wide bodies. But that's a difficult question that you asked me, and I will try to answer it to the best of my capabilities. And quickly, I will try to set the scene. Since the early days of the jet era, in the modern commercial aviation industry, in the 1990s up to today, the air traffic, passenger air traffic, has doubled every 15 years throughout all major crises. This has brought the global fleet from 9,500 aircraft to today circa 23,000 narrow-body and wide-bodies. And today, 45%, circa 45%, so almost one airplane into two, is owned by an aircraft leasing company. The industry started in the 1970s with a 0.5% market penetration. By the 1980s, it was less than 2%. But today, we have one airplane into two owned by a leasing company. So how does it happen, and what are the driving factors? The driving factors are of two natures for airlines as far as we understand it. The first one is financial. For airlines, to lease an aircraft means a lower ownership cost and risk, because you don't have to actually do a capital outlay, capital outflow to purchase the aircraft, and you have no residual value exposure. The second one is with regards to the fleet management that you have, whether you want to have access or not to new technology. And that drives also to the all the operational aspects that you have with regards to medium-term or long-term planning, accessing to key valuable slots from manufacturers, and also catering to demand in the medium or long term. So genuinely, these financial and operational drivers have brought airlines to actually lease aircraft. Now, Stefano, with regards to your question, what about the future? Well, Airbus and Boeing are forecasting that the fleet will double in the coming 20 years, that the global market needs 40,000 aircraft, so there is room for demand. Now you have rising interest rates, you have also geopolitical tensions. These, of course, create some challenges where actual leasing companies bring some differentiators and make a difference, and this is where at Nordic Aviation Capital we've been able to apply our specialization in using our balance sheet, in using our different instruments of borrowing to actually support the growth of airlines. So that's my answer.
Thank you, Bruno. And now I move quickly to Prasad Gadkari, who is the head of the NIIF, National Investment and Infrastructure Fund. Now, capital is very important to nourish the system. And do you think that financial investors and capital markets adequately support the system here in the industry here in India ahead of this huge challenge? And in addition to this, do you think that additional steps are required versus the present to bring in the additional capital in the pool?
Good afternoon to all of you. Thank you, Stefano. Many thanks to the Ministry of Civil Aviation and FICCI for inviting us for this fantastic conference. I think the way we see this, amongst, if I look at various sectors which are there in infrastructure, I think airports is one of the most interesting, large, complex, but financially attractive sectors. And if we look at the Indian privatization history in various infrastructure classes, relative to other sectors and notably like roads and power, I think the experience in airports is pretty strong and quite fantastic. In fact, if I have to say, the supply of projects relative to a country of our size and the scale at which it is growing, perhaps could have been higher. Having said that, the way financial industry and financial investors are looking at this, I think has kept on evolving. If we see over the last 2 decades, right from perhaps the first private airport which happened in the country, which was at Cochin, which had a couple of, it was sponsored by state government along with some private entrepreneurs, but it had some financial institutional investors back, I'm talking 2 decades back. From that stage to the Delhi-Mumbai situation where in my previous avatar, one of our earlier organizations called IDFC, we were joint venture partners at the bid stage with GMR in the Delhi airport. To a bunch of investors which took stake in GMR Airports Holding Company, to a recent transaction at the Bangalore airport. I think we have, across situations, we have seen participation of financial investors pretty much enthusiastically. And I think overall the experience for everybody is quite robust and strong. Having said that, I think in course of the evolution of infrastructure as a sector, the way financial investors are looking at it has kept on evolving, and I think it continues to evolve. So case in point is my company, which is National Investment and Infrastructure Fund, which is anchored by the Government of India, along with global investors. The way we see this is, infrastructure, airports, it's a combination of a strategic and a financial play. It's not a pure play, financial play, till the asset reaches a stable cash flow, stable dividend stream. Till that time, it needs a good intervention on operating skills, strategic skills, financial skills. So you need to approach it from that perspective. So the way we are looking at it is, we would like to create platform companies looking at various sectors. We have done a joint venture in the port sector with Dubai Ports to look at ports and logistics. We would like to think of the airport sector in a similar fashion that we can try and replicate something similar. So that's the way the journey is progressing. And I think at some, I think in the short term itself, we would also, I think, see capital market and public market investors also, which would like this asset class. The only caveat being, I think the asset class will have to show the characteristics what the public market investors is used to in terms of corporate governance, in terms of disclosures, financial reporting, dividend flows, because those are the investors who do not want to get into the details. Yeah. They would like it like a regular consumer business. So I think that journey is very much on, but the short point is, I think financial community is pretty much excited with the sector.
Thank you, Prasad. Rather than wrapping up, I would like to leave really 2 minutes to Mr. Tolasido, last but not least, because this is an airport. I said the size matters in terms of prioritization. But your airport has just become operational in last December as to challenge the high competition from other airports in the region, as to grow its build its traffic over the next years. How can you try to be economically sustainable, taking advantage of the opportunities of this market? And then with this, I thank you all for this listening to this audience.
Yeah, I know it's going to be a challenge. It's the youngest airport in the country, perhaps in the whole world. It's the youngest. We have been there only for a month and a week, month plus a week. But it's a beautiful airport. As I think Secretary Civil Aviation or Honorable Minister will bear testimony. And we have been able to build it at a time when all the processes had to be very strictly followed. So we have delivered a very good airport. Now comes the challenge of making money out of this. We don't plan to make money out of this in the next 3 or 4 years, which is unlikely for any airport. Airports do make money, but not in the beginning. What we need is more flights. We are getting some of them. We need the support of the Ministry of Civil Aviation to get more of them into the airport, especially the international carriers. That alone can bring us the revenue we require to make the airport viable. Secondly, we have taken into account in our estimation only about 25% of non-aero revenue in our projections. But we have a large land area, larger than any airport in Kerala. We are the second PPP airport in Kerala, and we plan to make better use of this and raise the share of non-aero revenue from this. We can contribute to the development of tourism in North Kerala and in southwest Karnataka, which is going to be important not only for our revenue, but for the overall development of that place, plus exports from there. So we have a big challenge. We need the support of the Government of India, of the Ministry of Civil Aviation. We should be able to manage after that. Thank you.
Thank you again. Thank you to all the panelists, and please join me with an applause to them.
Thank you to the Honorable Moderator, and thank you to the panelists for participating. Thank you very much, gentlemen.